What's up, you guys? It's Matt here. You know, I like to talk about AMC, and this position for me has had its ups and downs. I've been able to gain quite a bit from it and also lose quite a bit from it. At the same time, still being able to see a ton of success within the position. Um, but I hate the fact that the stock market is so manipulated and the way that hedge funds just throw around money and big money or smart money decides to throw around money like it's nothing and just continue to print more and just add more and do all of this in order to kind of bail themselves out and just profit off of the end, which I feel like they still are, right? As they see the prices and they're going to certain levels and they're making moves where it looks like it's up 30% or 15% or whatever. They're making money through that process through options and all of this. So they're just trying to make it more predictable for them until the eventual collapse of what we have, right? They're just going to keep adding to their gains by buying options, buying shares to see some of those gains on the other side. They're just doing so much to kind of predict where AMC is going to go, where a lot of things are going to go, and they know that AMC is not really the biggest money driver right now, right? Movie theaters, I think, are great, and I think you're still going to need movie theaters, especially with all the big budget films. You're not going to have Marvel releases directly on Disney Plus or releases directly on Netflix for $100 million films and $500 million films, or things like Avatar, to where it's $2 billion to create. And literally just to break even, you have to make billions of dollars from the box office. That's not going to go away, and you're not going to be able to make up that cost by being on a streaming service. So for me, I feel like theaters will still be around forever, and I always want that experience for the children and for me as well, because I grew up on movies and I still love movies as of this day. That's like one of the things that we do whenever we are bored. We're like, hey, let's go to the movie theater. Let's go and get some popcorn, relax, watch an animated movie or whatever movie we watch. If it's just me and Erica, we'll watch whatever movie we want. But if we go and watch, Paw Patrol or The Little Mermaid or whatever we want to go and watch that's in theater, Sing 2, we will go and see it. Anyways, that's enough of that. I hate the fact that they're doing all of this shorting. So let's get back to that portion of it. AMC is consistently being shorted. Every single day we see over 50% of short volume. This doesn't mean that the overall short interest is 50%, but I mean, it is at a very, very high percentage, meaning that it has a high short score. So if I want to start out by showing you that high short score, you're going to see that AMC is at an 89 for short score, being at a very, very high short score. Short interest is at 23.6% of free float, which is insanely high, comparing it to something like Amazon, which is less than 1%. Or comparing it to a lot of other positions that are less than 1%, but they decide to consistently short AMC because they feel as though AMC should be worth nothing. But us as investors, us as believers, us as moviegoers, we want to make sure this movie theater chain, this corporation, this place that we all know and love survives, so that we have movies to go to. I mean, they have a crazy amount of movie theaters. I don't know exactly how many they have, but they have a lot of movie theaters across America. And I'm one of those people that goes to different AMC movie theaters, whether it's a dine-in movie theater or just a regular movie theater that's close to my house. But anyways, they believe that it should be worth nothing, and you're seeing 23%, 23.6% that is short. Now, this is different than what you would see with the overall short amount of short volume in a day. So short interest will show you 24%. Short volume will show you how much they are shorting consistently. So if somebody shorts a position, let's say you short 100 shares, you're going to recover those shorted shares or cover those shorted shares at a lower price point. right? Then you end up shorting again. So it's just shorts on top of shorts on top of shorts, and then adding in sells so that when people, let's say you short the position, it goes down to a certain price, right? Other people short, it goes down to a price. You see people that start to sell because they get tired of holding it. It goes down to a certain price. It keeps going down, keeps going down. Then those initial people that decided to short, which were the hedge funds, decide to cover, make money, and now it's going up in price. You see people that are starting to buy. They end up shorting at some of those peak points, and then you see it just all over again. And they continue to do that. So while they short 100 shares, they're shorting 100 shares, 100 times. Or they're shorting 1,000 shares 1,000 times, right? They're just continuing to short every single chance that they get on any upswing. So that's why you're seeing the short volume that ends up being 57% or 59% or 64% or 60%, or whatever, because they are consistently shorting it every time you have any type of upswing. And you see that within the position as you go and you look at AMC, you see that within the position in the day. You see it falls down and ends up seeing an upswing. They recover. You end up shorting it again, falls down. They end up recovering, right? Falls all the way down to here. They end up getting a decent sized profit from it. And now they're waiting to find a way to short it again. And they're waiting for it to come up, probably to touch this touch point, if not the 200 EMA, and then they will short it again. And it's just going to be over and over and over again to where they keep shorting it and it's over 50% or 60%. And the problem is that the reason why it's not full short interest, and you're seeing that over time, is because it's like a day trader, right? A day trader can day trade as many times as they want, make as much money as they can, but they never have a true presence in that position. That's exactly what you're seeing there, is day trading on the short side, but with a massive scale from a lot of these hedge funds and, bigger shorters and bigger whales and all that stuff. So it's definitely interesting to me that they continue to do this. And this is why I hold, right? I hold because of not just because I want to make money from it and I want to see this profit, and I believe it will. It's because of the overall message of you can't just collapse a business or bankrupt a business because you want to. And that's the type of message that I want to show, especially something that I truly care about, like AMC. They already took away Toys R Us, and that was something big from my childhood because it was a huge experience, not buying toys, but going there and being a part of that experience. And now, they want to take away things like GameStop, which is a big part of my, childhood, and AMC, which is a huge part of my childhood, as well as, my life. So anyways, guys, let me know what you think about this. Is this right that you're seeing 50% short? Is it wrong? Do you believe that it makes sense? I know there's some people that are very bullish on this being bankrupt. I mean, it's understandable. People can think whatever they want to think, but being this short, having this many holders, this many believers, it makes no sense why it should fall this much. But hit the like button, hit the subscribe button, hit that notification bell for more of these videos. If you guys want me to continue to do more AMC content, please let me know, because I do like to cover AMC. That's one of the only positions that I am holding right now in the stock market, because I haven't really dove into the stock market too much. I wanted to hold Meta, but I didn't get a chance to buy it at $99. But yeah, I'm going to get out of here, guys. Thank you so much for watching, and I'll catch you in the next one.